If you've been following my channel for a while, you might remember when I used to talk about my strategy of buying stocks in thirds. Basically what that meant is if I wanted to own a position of a stock but wasn't sure which direction it would head in, I would break my overall purchase into 3 separate purchases over time to make sure I got in at different price points, and that way if a better buying opportunity presented itself, then we could take advantage of it. Now, it's something that I never actually did on the Watchlist Wednesday portfolio because I never really saw better buying opportunity as the market continued to climb. Well, this week, with the market taking a little bit of a hit, I decided to actually utilize that strategy. So instead of reviewing a different stock this week, I'm going to give you 3 stocks that I decided to double down on and explain why I'm very excited about these stocks now. Hey everyone, thanks for joining me today. My name is Matt, and as I mentioned in the intro, a little bit different of a Watchlist Wednesday video because we're actually going to be reviewing 3 stocks that I've already added to the Watchlist Wednesday portfolio, but are ones that I'm going to buy additional positions of. Now, before we get started here, I just need to say, not advice, I'm taking it as advice, speak to a financial advisor, just for entertainment purposes only. You guys have heard me say that before, right? Also remember, if you like this video, it's a 5-cent donation, and if you subscribe, it's a 10-cent donation. I must have had a video take off really well because my subscriber count has grown significantly, and we are now over $30 worth of donations so far. So I'm very excited about that, and just thank you to all of you who have liked and subscribed to really help us grow the amount that we'll be able to donate at the end of this year. As I was saying already though, this video is going to be a little bit different, and it's also probably going to be a little shorter here, so I don't want to waste any time. Let's go ahead and jump right into this. Now, the first company that I am going to add more positions to or expand my positions on is Apple. Even if you don't follow Apple stock, you probably heard about the recent quarter that they had, and it was incredible. A few highlights that I saw from the earnings call that made me want to expand my position in Apple was, first off, they experienced double-digit growth across their entire product line. Now, I'm aware that it is a holiday season during that quarter they're reporting in, so that should have a factor on your product sales. But overall, it's not every year that you go out and buy a new MacBook or a new Mac computer or even a new iPhone for that matter. So for them to still be able to have double-digit growth in all product categories, and yes, this includes things like the Apple Watch, Apple TV, the Apple HomePod, I think that's like their home speaker thing, and their more traditional items like your Macs and your iPads, is something very encouraging to see, because that just goes to show, at least to me, that Apple is still able to maintain our interest and can still keep us excited about their new products and offerings. Also, this was the first quarter that they were able to break $100 billion in revenue. And yes, I said that correctly. That is $100 billion with a B dollars in revenue over a 3-month time period. Now, that's something that I actually only see to continue to expand in the future, is because we're starting to see the new iterations or the integrations of Apple One, which, if you're not familiar, that is their service where it's like an all-in-one. So if you want Apple Music, Apple TV, Apple Fitness now is a new thing, even iCloud storage or Apple News, you can get all that on one subscription service, and it's actually for a relatively affordable price. I covered all of that in the Apple video if you want to hear more about that. But I think that's also going to be something, you guys know me, I love those reoccurring sources of revenue, and this is a great way for Apple to have or generate that reoccurring source of revenue. Also, as an extra added incentive to the shareholders, they are increasing their dividend again. Now, Apple is not a company that I invest in for the dividends. I still look at them as a growth company, but the fact that they're able to have this tremendous quarter and then say, yeah, also we're going to raise the dividend as well, is just the icing on the cake for me. Now, Apple is one of those companies that I'm very comfortable with, so I really can justify buying them at any price. But with them being at a little bit of a downtick this week, I felt like it was a great opportunity to add more shares to my portfolio. The next company that I felt was a good time to double down on was Disney. Now, overall, Disney really impressed me throughout 2020. Given the circumstances, I really felt that this would be a bad year financially for Disney, and I was pleasantly proved wrong. Because some complications that I saw was, first off, the expenses of having to shut down the theme parks. Obviously, that's going to be very expensive to have a holding cost for those without being able to generate revenue through them. Also, if you think about the complications when it comes to just creating content, there's a lot more things that had to go into consideration, and it didn't make it that easy to be able to make new shows or movies like they did during 2020. So Disney has really proved themselves to be more than just a place where you can go watch Moana or Frozen or The Lion King. It actually proved to be a very resilient company and one that is a very strong company. In fact, analysts also had a little bit of a negative outlook when it came to Disney for this year. They had them coming at around a negative 42 cents a share earnings per share, so loss per share, I guess we can call it. But Disney actually turned the tables and was able to have a 32 cents earnings per share. So obviously that's like what, a 70 cents difference from what analysts were expecting. And that just means that Disney has really proven themselves again to be resilient and can weather the storm regardless what's thrown at them. And that's something that I like to see because obviously these were unprecedented times and there was a lot of things that we've never had to deal with before, but Disney was able to still capitalize on that and make the best out of a pretty bad situation. It probably comes as no surprise, but one of the biggest support systems that Disney has had has been Disney Plus. Now they have Hulu and some other brands underneath them, but Disney Plus has been such a strong driver of growth for Disney, and it's something very encouraging to see. They've actually raised the anticipated number of subscribers that they'll have by 2024 to 230 to 260 million subscribers. Now, to put that in perspective, Netflix has around 197 million subscribers, and we've actually started to see Netflix's subscriber growth start to dwindle down a little bit. So I would not be surprised if at some point in the next 3 years, if Disney Plus had a larger subscriber platform or subscriber base than Netflix, which is kind of weird to say given how new Disney is, but it's something that I'm very excited about and something as a shareholder I look forward to hopefully seeing. And lastly, they are also going to be extending Disney Plus to new countries. They're looking to get towards Eastern Europe, Hong Kong, and South Korea, to name a few, which again is going to help add to that subscriber base and hopefully allow them to generate more revenue. And lastly, the company that I want to double down on is coming to a surprise even to me, but it's Pinterest. Now, Pinterest has consistently surprised me, and again, in a good way, with the way that they've been able to perform. I know I've said it before, but I'm still shocked to know that Pinterest has more users than Twitter does, which I guess is starting to become less and less of a surprise, but ultimately, I did think for the longest time, Pinterest was just kind of a dud platform that nobody was using, kind of like, you guys remember StumbleUpon? Kind of like that website. I don't even know if that's around anymore, but no, they're around and they're doing very well, and they're actually getting better with their monetization, which is what is getting me most excited about them. So they recently announced a partnership, or I guess around 6 months or so ago, with Shopify. Now this is exciting because it really adds to Pinterest's new feature, which allows people to actually shop on their platform. So again, let's say you really like my ukulele sitting here, and if you saw this on Pinterest, I might have like a little tag there where you can directly buy that from somebody who sells it on Shopify. That allows for Pinterest to get a small commission made from that transaction for bringing you the customer. And that actually has been something that has given them more revenue than even they anticipated. I think it exceeded their expectations by around 20 times. So that is going to be something that adds a lot of money into Pinterest's pockets. Also, they have a gross profit margin exceeding 80%. So this is obviously a very cheap company to run, but they do a great job of the monetization and keeping money in their pockets through the activities that they do. Now, as a shareholder, a gross profit margin of 80% plus is absolutely something that is great to see and something that gets me very excited for a company that still has room to grow. Now, I don't know if they'll ever get to be the size of Facebook. Right now, I think they're like a third of the size of Facebook, probably even less than a third of the size of Facebook. But ultimately, as Facebook has more and more bad publicity focused towards them, I think Pinterest is going to come more into the spotlight. How they do that, that's up to them, and that's something that I'm going to be watching moving forward. But nonetheless, I really believe that Pinterest is an underdog stock and is one that can do very well for my portfolio, because if I said for yours, that'd be advice. But Pinterest is a stock that I get very excited about, and one that actually, full disclosure, I've added recently to my own portfolio, given how well they've performed. All right, so unfortunately my camera died on me, so I'm just going to not show my face here, but I wanted to show all of you the portfolio, so I'm just recording my screen. As you can see, the new additions to the portfolio right here, we do have our Disney, which is up $33. I bought 25 shares of that, and let's see here, it came in at around $198 a share. So not a bad addition, and again, one that I'm still excited about. Now, if you're saying, why is this a new addition to this portfolio, but you said you've had it? Well, if you're new here, I used to do this paper trading on E-Trade. So it's still in that E-Trade account, but I ran out of money on that one, so I switched over to this Webull platform. And the same thing goes for Apple. With Apple, not doing as well, but that's okay. We still bought 50 shares of Apple and it brought us in around 125.62. Still on a little bit of a downtrend, and that honestly might still give us a little bit better of a buying opportunity if I wanted to add more shares. I'm going to hold off for the time being because I just don't really want to try to time it like that. Should this one maybe drop to 115-ish a share, then absolutely I would add more to my portfolio. And then with Pinterest, so we already had Pinterest in the portfolio, but I did go ahead and add an additional 50 shares. I think I could show you that. Perfect. So you can see that I actually added this one yesterday to the portfolio. We bought 50 shares yesterday and we had a price at $83.08. That's crazy to think of buying more shares at $20 more a share. Hindsight's 2020. Obviously, I wish that I bought it at everything at $63 a share. But with that being said, it's always just worth noting that we can't predict the future, but if we have a strong enough future outlook for this stock position, then it is one that's worth buying, even if it is at a higher price. And again, that's not advice, so you shouldn't take it as advice. But those are the 3 new additions to the portfolio and ones that I'm very excited about. So I know this has been pretty different of a Watchlist Wednesday video, and I apologize if it's not what you've been expecting, but I just feel like it's important to show my investing strategy sometimes more than just talking about individual companies, because that is one of the ways for you to become a better investor. So sometimes there's nothing wrong with buying more shares of a position you already own if it's one that you have an optimistic or a positive outlook for. And admittedly, this is my approach to talking about a down market instead of, sorry, love Graham Stephan's channel, but it does drive me a little crazy seeing those titles with like market crashing, looks like he's having the worst day ever, and then you watch the video and it's not what you expected at all. I'd rather just be point blank with you. I know that's why my channel is not that big, and maybe I should do a little bit more clickbait, but I just can't stand clickbait. So anyway, you didn't need to know all that anyway, so I'm going to wrap up here before I say anything else. Thank you so much for taking the time out of your day to watch this video. You could be anywhere in the world, but you're right here with me, and I really appreciate that. But I'll let you go ahead. Hopefully it's nice outside wherever you are. It's like 70 degrees here, and it was like ice last week, so I'm going to go spend some time outside. You enjoy the rest of your day, and I'll see you next time.